Question, I bought the 17 close. Okay, that makes sense. For a swing trade using a wide stop and scaled in on the way down and took the loss. Okay, now my only concern about that was I mentioned at the time, I don't know if you were in the room at the time, I mentioned that the bars were fairly small and it's probably a bull leg in a trading range. Buyers below 20, and you can see we went up exactly 5 ticks, and that tells you that the bulls were all scalping. So the bulls were scalping in your swing trading, and you're entering fairly high in what is probably a trading range day. So for me, I talk about this occasionally, if a day is mostly a trading range day, my routine is to scalp until it's clearly not a trading range day, and then sometimes they'll swing parts, sometimes they'll scalp parts, sometimes they'll swing all. But 16, 17, 18, to me, I said at the time that that's not how strong trend days typically begin. So this is probably a bull leg in a trading range. So my only thought is I would not take that as a swing trade. Okay, back to your question. I bought the 17 close for a swing trade using a wide stop and scaled in on the way down and took a loss. My other thought about that is if you're buying and you're willing to scale in using a wide stop and you think the day is either a bull trend day or a trading range day, you have to be really patient. You got to use a wide stop. And what's a wide stop? Sometimes it has to be 10 points or more if you're buying at what might be the top of a trading range day. And I think that's what the 17 high was. So you would have had to use 8 or 10 point stop to avoid being stopped out, which means you have to trade really, really small, assuming you held on the way down. In a situation like that, if I buy that 17 close and then I see 3 or 4 bars, and I think we're always in short, I'm just going to get out and take the loss. I'm certainly not going to scale in. And if anything, I'll try to get short for scalps on the way down. Okay, back to the question. I then shorted bar 44, okay, and scaled in when it was still on its low and repeated the same thing in the reverse direction as the market was climbing. Okay, what you do is a really common thing. Okay, if you read my post this morning, the update that I did around 7 o'clock, I wrote probable trading range day. When the open looks like this, it's probably a trading range day. And a really common thing that happens to beginners all the time on trading range days is they see the bull breakout and they buy. They see the bear breakout and they sell, hoping that the day is no longer a trading range day. But 80% of the time, remember my 80% rule, inertia rule, 80% of the time, strong breakout attempts up and down in a trading range day fail. So if you're buying a strong bull breakout near the top or selling a strong bear breakout near the bottom, you're taking a trade that has an 80% chance of not going very far. I understand what you're doing. You're saying, okay, I'm starting out, it's better to swing trade than to scalp. But if you're swing trading and the day looks like this, do you think it's going to be a bull trend day or do you think it's going to be a trading range day? And when the breakout is small like that, do you think it's going to be a bull trend day or do you think it's going to be a bull leg in a trading range? And it's probably going to be a bull leg in a trading range. On the way down, when you see a sell-off that looks like this, where are the big consecutive bear bars closing on their lows? Ah, you finally got them, right? But it's a second leg down in what has been a trading range day, so it's more likely that this is a second leg trap, especially since it's right at support, yesterday's low measured move target. I understand it's easy to get excited. You see the market finally breaking out, finally has the potential of a trend, but when most of the price action is trading range price action, and you see a second leg that looks especially strong, yet it's not breaking out above major support or resistance on the chart, it's still basically within the range, you have to assume it's a buy climax, a second leg trap, or sell climax, second leg trap. So it just takes a long time, I think, to get used to it because the sell-off 43, 44, it just looks so promising. And then 16, 17, 18, you have a series of consecutive bull bars finally breaking out. It gets you hopeful, even though the bars are not big. But you have to just keep telling yourself, Al says it's probably going to be a trading range day. So I got to watch out for second leg traps, and which means I got to be really careful about buying strong breakouts at the top and selling strong bear breakouts at the bottom, because too often they're just second leg traps. Okay, question, is buying below the 40 low? Okay, is buying below 40 low for a scalp an acceptable trade? And if so, how would you manage the trade? A lot of times in trading range days, between 10 and 11 o'clock, you get a strong breakout like that, okay? And it looks like the day's turning into a trend day. This is really, really common in trading range days. It's a trading range day at that point, and it tries to become a trend day. And so if you're buying for a scalp, what do? How do you manage it? And then you see 3 consecutive bear bars. Either you get out on the close of the third bear bar, 42, or you get out below 42, and guess what? That's what happened on 43. A whole bunch of traders said, I don't like 3 consecutive bear bars. I'm getting out if we get a 4th bar in this pullback. And that's part of what caused 43. So if I bought the 40 low looking for a scalp, and then I got 3 bear bars, 40, 41, 42, 42 closing on its low, at worst I'm going to get out 1 tick below 42, and that's what everyone on the planet did over here. So everybody did that. So for me, that's the management. And if anything, I'd get out here, right? I would be starting to think it's probably a second leg trap. There are probably buyers below 34, probably buyers below 1. I'm going to get ready to look to buy, either above 45, a bull bar, and you got legitimate scale-in bulls here, scale-in bulls here. So we'll probably get back to here, maybe all the way here, and scale-in bulls will buy above a bull bar, and they bought here, right? So I would be looking again to buy. I would get out. I would take the loss up here had I taken that buy, but I would be ready to buy again.